The analysis of profit during overbought or oversold market measures your average trading performance in case you perform trades either with or against the current market situation. In easy words, a market is classified as overbought in case the market has been rising significantly during the recent past. You can interpret it in a way that there have been a lot of purchase recently, hence the market may be overheated and a correction may come soon. The same applies to a market that is oversold. The market price has been dropping significantly recently and might soon recover. The market environment at the current point can be measured by using certain indicators, such as the RSI indicator. This indicator, for example, measures how often in the last time frame the market went up and how often it went down and how strong the movement were. Of course, an indicator like this can never predict the next movement of the market with certainty. However, as the name already suggests, might give you a certain indication. In the analysis, your trade will be mapped to the market environment at the time of trade opening. There are different situations described. First, you may open a long trade during a time when the market is oversold, or you might open a short trade during a market that is overbought. You may do this because you think the market went too strong into one direction and is likely to revert the recent movement now. Therefore, we classify those trades as against. Secondly, you may open a long trade during a time when the market is already overbought, or you may open a short trade while the market is already oversold. You may do this because you think the market will continue to go along in the direction in which it moved in the recent past. Therefore, we classify this trade as a long. Third and lastly, you may open the trade during the time when the market is neither overbought nor oversold. The market during this time is outside of any stronger movement into one direction. Therefore, we classify those trades as outside of. You should not interpret this analysis as a way to check whether you perform better in case you follow the trend or actually trade for a trend reversal. For this, we have a separate analysis, profit with or against the trend, looking at the short and mid-term trend during the time of trade opening. This is covered in another video. You may not actively use any indicator of overbought or oversold in your analysis, and it may not be part of your strategy. However, you can still draw very valuable information from this chart, as you can cross-check during which times you actually perform especially strong and during which times not. Looking at the chart, we can see the three categories which I elaborated just now: against, outside of, and alone. The chart shows your average trade performance in pips in each of the categories. Of course, you can also check your average trade performance as return for your trades or also in different time frames, such as only during the last month or last 3 months. This is especially helpful if you recently started to incorporate the result of this analysis to your trading and want to see how your performance changed during the recent past. However, now let's have a look at this trader's performance in pips. We can clearly see that this trader performs best in case he or she opens trade which against overbought or oversold market indication, meaning going long during the oversold times or going short during overbought times. More than half of the profit was made during those trades, although it only represents 213 trades, being a bit more than 10% of all trades. For trades opened during the time with no significant overbought or oversold market indication, the trader still made a little profit of 0.9 pips. While trades along overbought or oversold market indication, the trader even made a slightly loss on average per trade. From the example of this trader, we can clearly see that he or she has a significant profit-making pattern in the against trades. In case the trader will utilize this situation even more, there is a high potential to increase the overall profit. Other trades might still yield a little profit, however, much less compared to situation in which he or she opens a long trade during oversold times or opens short trades during overbought times. There's not one-fit-all interpretation to this chart. Actually, we see traders that are especially profitable during against, while others are especially profitable during a long or outside off. This may well depend on the time frame for your trades. It may be that you are always taking only a very small profit in your trades, holding the trade for a few seconds or minutes. During an overbought market environment, there's usually quite a bit of low momentum in the market, which could well be harvested with a quick trade. You may not actively use any indicator of overbought or oversold in your analysis, and it may not be part of your strategy. However, you can still draw very valuable information from this chart. You can cross-check your current trading performance whether you have an especially strong or weak performance during the market condition and your trading. You may not use the indicator, but find that you perform especially well during times when you order a long trade and the market is oversold, or open a short trade when the market is overbought. Based on this information, you may want to add the indicator in your chart analysis to seek the situation when you on average show a strong performance. The other way around, you may want to lower your lot size of your trades in case you enter a long trade while the market is already overbought, or enter a short trade while the market is already oversold. You can also observe the average performance in the three categories of other traders, which shows an overall profitable performance. However, keep in mind that the trading style and trading strategy may be very different from person to person, and there is not one golden strategy which can make you a safe profit. Finding your own strategy that fits you and make you a profit can be a long process. However, exactly analysis like this can be a great way to reflect on your own performance and identify influences that actually give you a better or worse performance. In case you do have a significant loss-making pattern due to opening a trade in either of the category of against, a long, or outside off, you may choose to receive a notification from us warning that you have just entered another position which on average yields you a loss in your trades. Trading can be very demanding, and a little technical support may actually help to free your mind and focus better.